Welcome to the P Potential Success Show. My name is Fong, and today we have another great guest. He comes highly recommended because he helps his clients make a lot of money. He is not your typical Wall Street investor. In fact, he started in mortgages, in which he became an award winner in residential loan officer. He then became a real estate investor, built his very first real estate company in 2019, built a huge portfolio, and then also gained a lot of expertise with regards to private syndications. From there, he became a fund manager, and today he's now also managing multiple funds and really emphasizing on transparency and also aligning his interests by investing his own capital alongside his investors. So please welcome founder and also managing partner of Harvey Capital, Mr. Will Harvey III.
Hey Fong, thanks so much for having me. Your introduction was one of the best I've ever heard, and I hope I can live up to
Awesome. Well, thank you very much. I almost wanted to have like trumpets by saying because you're Will Harvey the third. Wow. Like so it's
Oh man.
I don't get the third or the second or the fourth, whatever, at all. So you're the very first to come in with that kind of title. So
I
thank you
love
very
it.
much for being here. I'm going to start off by asking your origin story. How did you become this person who's been able to be successful in real estate, in fund management, and all this other stuff? And on top of that, it's one thing to do it for yourself, but also help others succeed as well.
So I got started back in 2015. That's when I got into the mortgage business, and that was after dropping out of college twice. So I dropped out of two different colleges. I'm a double dropout. The first dropout was to get sober. It was to come home and get sober. And then the second time was after I got sober, I walked on and played football at a school in Ohio for a short while until I had two hip surgeries, and that was the end of that. So I came home and I got into the mortgage business. A family friend has a mortgage company, and he got me started in the mortgage business. I learned the business for about a year, where I was just processing loans and doing all the back office stuff that was honestly very, very boring. But it was good to learn and cut my teeth on that. And about a year later, I went off into loan origination and had a good run in 17, 18, and 19. Started buying properties, investing in different things, and but I ultimately wanted to start my own company and do my own thing. As a loan officer, I made great money, but it was W-2 income, and there was no equity, there was no upside. I was just a high paid employee. So I wanted to do my own thing. I also didn't like I just didn't enjoy working for someone else and working for a big company. I just like doing my own thing. So a partner and I, we started a house flipping company in 2019, and at the end of 19 is when I left the mortgage business and went off into that full time. Um, and that was great. I flipped, I don't know, 14 or 15 houses over the next few years, and was able to invest in some multifamily syndications. I was using the cash I was generating from flipping houses to invest into these syndications. And by doing that, because I was considered a full-time real estate investor in the eyes of the IRS, I was able to take the passive losses that you get from the heavy bonus depreciation on these properties, and I was able to directly offset the income that I was generating from flipping houses. So it was a really cool way to not, to legally, I should throw that out there, legally pay very little in taxes and, grow wealth. So that was cool. And I did a few more during that time. I me and some partners bought a wedding venue. We bought a small hotel. And but all the while, I just realized that, I don't really like being on the operator side of things. I like being on the finance side of things a whole lot more. I love spending time, behind my computer and spreadsheets and well now Claude. I don't really use spreadsheets, but I love that. I love the capital side of things, the finance side. So in 2023, I started my first friends and family fund, and hard money lending is something that was accidentally born from that original fund, and then fast forward to last year, I really we had been doing the hard money lending more as a side hustle from this fund, but then I decided to start our own company doing that and raise a couple new funds for the hard money lending. So that's my main focus now, and took a while to get here, but I just realized over the years what I like, what I don't like, and that is something that just takes time, I think.
You're a prime example of school's not for everybody. And
Yeah.
you've done very, very well for yourself after the fact that you got out of school and you found your own thing. Now, what was it about school that didn't resonate with you? Because you're talking about numbers and spreadsheets and all that kind of stuff, which is what probably most people strive at because of school. And they're good at school because they like the details and the numbers. But for you, you found that love later. So what was it in school that just didn't resonate?
I think in school, you're being forced to learn things that you may or may not be interested in. And, you know, when I go on YouTube or listen to podcasts or read articles or what about a topic or books, I read tons of books. I am genuinely interested in those topics, and no one is forcing me to do it. No one is, I would get in trouble if I got bad grades, so there's none of that now. I'm not going to get grounded if I don't learn something. And it's just a much more real thing where it's like I learn about things I'm interested in, and things I'm not interested in, I don't care to learn or read on. And I think in school you're forced to learn stuff that just I don't really care about, like ninth grade calculus. I don't use any of that, and
Exactly.
I knew I was never going to use any of it at that time, and sure enough I never have. And so I don't know, I just have never really, I was never a school person, and just didn't, I kind of got by with C's. I did the bare minimum just to skate by, and I always thought that I had a problem or that I was just not that bright, but as I've gotten into the real world, as they say,
Mm.
I've just realized that it's not any of those things. It's just I want to do what interests me and excites me, and I want to learn about those things. And school, they're just forcing it all on you.
Now, you mentioned that the mortgage side, when you first started, the stuff that you were doing was kind of boring. So what kept you in it? What was it about that area that goes, you know what, it is boring now, but I can see something. I can see this working.
Yeah, so at that time I was making $30,000 a year. It was a straight salary, so not a high income at all. But I knew that once I went off into loan origination, it's 100% commission, and I knew that I was in direct control over my income at that point.
Mm.
My input, the amount of work that I put in would directly translate to, how much income I made. So, that was exciting for me. I didn't like I've never been a fixed salary type of person. I've always wanted to, eat what I kill, and so I think having that light at the end of the tunnel and knowing that eventually I'm going to be 100% commission and I can work as long as I want, and my paycheck is going to reflect that.
So once you're in 100% commission, that means you're a good salesperson. You're somebody that's good at speaking. You're somebody that's good at building relationships and connecting and networking. Or is that something you've worked really hard on becoming? Because like sales is a tough thing for a lot of people because they're afraid of selling stuff. What was it about sales that you found naturally good for you?
I never really looked at it as sales, and I feel like I'm a terrible salesman, and I used to tell people that I'm not, I was never pushy, I'm never promotional, I never, you know, I think that what I learned is that because I was scared of all that stuff too. I hated, what I I started going to open houses to meet realtors, and I would bring a plate of cookies and some information about, our company. And I quickly realized that no one cares about the information. No one cares about the rate sheet or any of that. So I deleted that and just started bringing cookies, and it was all about just developing a relationship. Hey, how are you? Tell me about yourself. Do you have kids? Do you have like it was never about business. If they steered it there, then sure, I would talk about it. But I just realized that, people want to if someone likes you and they develop a relationship with you, they will want to figure out how they can work with you. And the key is just being likable and being friendly and asking questions of the other person, trying to understand them and who they are. And I think that is something that was came pretty naturally for me, and I figured out over time that I would see other newer loan officers, and they'd be all about our company does this and we have these great programs and we have and it's like, dude, no one cares about any of that. you
So
know
no one cares about that. I have cookies. Come on, come on.
yeah, exactly. We have cookies, and at the time, you know what the one thing I would tell people is I'm I'm single. I don't have a wife. I don't have kids. I work all the time. Here's my cell phone. Call me anytime you need it. When your lender isn't picking up the phone and you need a deal to close, I'm your guy. And that really resonated.
I thought you were gonna also add in that, and I baked these cookies. I didn't
Yeah.
buy them. I baked them. How
Yeah.
long was it that you were in the mortgage and the loans and all that kind of stuff before you bought your first property? And what was
Um,
that first property like?
I actually bought my first property even before I was out originating loans and making more income. It was when I was on my $30,000 salary, and the way I did it was I had my father co-sign. So I learned about different loan programs and just by being in it. And in 2016, so this was still during that first year. This is sort of the end of the first year before I went off into origination. And I bought my first property, and I had him co-sign, but I showed him that, hey, I just need you to co-sign. I just need your credit and your income and all that, but you're not going to have to pay for anything, and I'm going to give you a piece of the deal. I'm going to give you, a piece of the equity. And, he was like, okay, this makes sense. I want to help my son, and also this is a good deal for me. So he co-signed, and I was responsible for the mortgage, and the way I paid it was, I rented out. It was a three-bedroom house, and I rented out two of the rooms, and I lived in the other one. And so they call it house hacking. I didn't even know that term at the time, but that's pretty much that's how I did it.
What I really love about that story was the fact that you approached your father with a business proposal.
Hmm.
Whereas a lot of people, can you just co-sign this? I need the money. I need to have a property and I need to live somewhere. But you went, hey, this is a business proposal. You are basically a money partner in this investment, which a lot of people don't do. Now, is that something that you came up with at your own at the time where, you know what, I can do this, this, and this? Or were you watching like other gurus doing it or other people talking about it? Like, how did you come up with this idea of, hey, I do this, make an investment property, approach my father this way, it's probably going to go through.
Yeah, I wasn't really. That was before I really started listening to podcasts and learning about stuff. I think I learned simply by. I mean, I intuitively knew that real estate was a good investment long term. I mean, you can look up information about that and how, it's the cliche. They can't produce any more land. They get, you know what I mean? So I knew that I knew that owning real estate long term made sense, and I knew that he knew that as well. He's always owned his own property. He wasn't really a real estate investor. He doesn't own rental property except through things that I do now, but he always has owned his primary residence, and he knows the value of real estate, and so I think it was just looking at the guidelines for I used an FHA loan, and and so, just looking at the guidelines and understanding how all this, how it all works, and just kind of thinking through, okay, what is valuable for him, and how can I, like you said, I didn't go to him with my hand out just saying, "Hey, Dad, can you please help me? I really want to buy my first house." It was more, okay, let's put together, let's be smart here. Let's put together an intelligent proposal that is hard for him to say no to, you know?
Right.
And that's how I did it.
Now, from there, then built a whole portfolio of properties, did a whole bunch of flipping, and I'm assuming from there you've also found like a lot of other joint ventures and money partners and investors as well. It's one thing to have your own family and friends as your investors. It's another thing to go out there and find new investors, new money partners. How much did that very first property with your father allow you to say, "Hey, look, it's been done. It's been proven successful. I've had a money partner before. It's going to work for you." Like, how much did that speak to your other potential investors?
Yeah, I think that I think it certainly helps. If not to a partner, it certainly raises my confidence and allows me to see, okay, I've done this. I went through this, and we solved X, Y, and Z challenges along the way, and we were able to bob and weave as we needed to, and I think I think we can continue to do this. So yeah, going through that a few times, he actually co-signed on the next one as well that I bought about a year later,
Uh-huh.
and the reason for that was because I was making a lot more money at the time, but because it was commission based, I didn't have the 2 year history that you need to get a conventional loan.
Right.
So, they average your commissions over 2 years, and I didn't even have one. So,
Mm.
and so for that one, it was very similar thing. And
Yeah.
and then, then I was able to kind of do my own stuff, and then after that, I got it more into syndications. But yeah, you're absolutely right. It helps going through that first deal, and there's always going to be challenges and mistakes, and I think just going through that and getting to the other side just raises your confidence, and is very helpful.
Mm. You've mentioned challenges and also bobbing and weaving a few times. Share with us some of those challenges that you learned a great deal from.
Yeah, there's so many. When you own property, it's people talk about passive income. It's
Yeah.
it's it's not passive income. It's there's a lot. The only way it's passive income is if you're investing with someone as a limited partner,
Mm.
because then you're truly a passive investor. But um, when you are dealing with tenants and people and moving systems, mechanical, you're talking about the HVAC systems and roofs and things that go bad. There's always going to be issues and problems that come up. So, just the course of normal wear and tear on a property, there's always things you're having to replace, and tenants are tearing up a property. You got to fix all that. You got to. Luckily, I learned very quick. I only got to 3 properties that I own just by myself. And then I realized that I don't like dealing with tenants. I would rather own commercial property where, you own it through a syndication, and you could hire a property manager. So, you know, I just, that was sort of how I solved that. I just realized that this isn't for me. And and then when COVID hit, the properties went up in value a good bit, and I sold all my rentals,
Mm.
and but yeah, no, I've dealt with tons of challenges. I've dealt with a property we lost $70,000 on. So, there's always hiccups and bumps along the way, and I think it's just I think that as long as you're not committing any crazy errors where you will get wiped out, like if you take on crazy amounts of debt or floating interest rates and then rates jump up. I saw that happen to guys, and so as long as you're smart there and you don't commit any errors that will completely wipe you out, then I think as long as you're willing to learn from your mistakes and not do them again, that you'll end up okay. And the mistakes will actually help you. It sounds crazy, but I'm grateful I've gone through the mistakes that I have, because now I have firsthand knowledge and experience. And I remember the sting of that. I remember the sting of losing 70 grand. And it's something that I'm not gonna let
Not gonna
happen
do
again.
again.
Yeah,
And for some crazy reason, the furnace craps out and the water tank craps out when it's winter time, when it's the coldest time of the year. And you go, oh,
exactly.
why? But
Yep.
anyway, so
And it's
uh,
always right before you go on a vacation or something like that.
I think I had to evict a tenant or something like that right before I was going on vacation.
Exactly.
And I'm like, oh, why now? Just let me go on the vacation first.
Exactly. Yep.
Um, so there's lots of people out there who would like to jump into real estate. One of the biggest reasons is because of that passive income. Now, you just mentioned it's not passive income. So for those people who wants to get into real estate, what's the best way of getting into it? Should they find somebody to kind of be mentored by or coached by? Should they go and just mingle and talk to people? What should they do to get into it? Especially now that you said, yeah, it's not passive income. What is
Yeah, I'm not trying to dissuade anyone. I'm just trying to be real and just tell people that I would set proper expectations. And
it?
if you think that you're just going to buy this house and collect a bunch of income every month and ride off into the sunset, I'm just saying that that's probably not how it's going to go. And you're
Right.
going to have issues come up. And I hope that it does. I hope that that does happen for you. And if it does, then you'll be pleasantly, surprised. But I'd rather expect the worst and then have something else happen than vice versa. So, yeah, I think for someone wanting to get into it, mentors are good. I've never, you know, I've I think in today's day and age, there's just so much there's almost a knowledge overload out there, and you can get stuff so quickly. And I think that going on YouTube and looking at podcasts and all that stuff is just so helpful. Books, there's pretty much any topic there is out there, you can find a really, really valuable book about, or multiple books. And I would just say for someone looking to get into it, be a sponge and absorb all that stuff. But don't get sucked into the whole, I just need to learn a little bit more. I just need to learn a little bit more. You got to get started. You got to take action. And, I have a quote sitting right here on my taped to my monitor, and it says, I forget who this is, but it was a big founder. I listened to this podcast called Founders. It's really, really good. And it was from some famous founder. And the quote is, action produces information. And I love that quote because, if you don't know exactly what to do, just get started doing what you think you should do. And that action will lead to data. It will lead to information. You may realize that this is not the right thing to do, but now and you won't do it again. And now you can course correct and go, take a right turn instead of a left. And I think that's what I would tell people. Go to RIA meetings, go to local meetups, go to see what other successful people are doing, and copy them.
Yeah, totally agree with that. I think I recommend a lot of people out there who, if they're thinking about whatever it is that they're thinking about doing, whether it's real estate, whether it's a singing career, whether it's whatever it is, if you're thinking about it, start it now. Build that
Yep.
knowledge, build that portfolio, build that content, whatever it is, so that all of a sudden, if something does pop up, you could actually act on it. versus,
Exactly.
oh, I'm gonna wait, and all of a sudden all those opportunities are gone.
Exactly.
So then you transition into what you're doing now, managing funds. What was the biggest aha moment or challenge for you to make that transition?
Um, I think the aha moment came before that when I realized like, aha, this is what I need to be doing. And it really came from learning about Warren Buffett. I mean, I've looked at going back over 10 years, I've been, loosely looking at Warren Buffett and, he has tons and tons of just really, really good quotes and he's a very wise human. But in 2023, I really started reading his annual letters to his investors, and I just got so hooked. And I read every single one of them, going back to the 1950s when he would put out his letters to the he ran an investment partnership at the time. So this is pre Berkshire Hathaway. And he would put out an annual letter and just talk about what they did. And he was just such a good teacher. And, learning about that and just seeing what he's doing and how he was, managing money from a finance side of things. He wasn't the one that was the operator. He was investing in different companies and different, businesses, but he was on the finance side, and that was sort of the aha moment for me. It was like, oh, this is, I can I can do what I really enjoy, which is looking at deals and dissecting things and spending time in Excel and and I don't necessarily need to and reading. I love reading. I love, just I have an insatiable curiosity. So, it was like I can do all that, but I don't need to be the one out swinging hammers and I don't need to be the one out managing contractors. And so that was the aha moment for me. And then, later that year I started my first fund, and that's the blueprint that I've followed since then.
Now, there's lots of people out there who's doing what you're doing, and they're doing it successfully. What is your USP? What do you do differently than the other fund managers? What do you look for? How do you ensure that what you're doing is like what others should be doing?
I think that a lot of, like, if you look at different hedge funds and different vehicles like that, I think there can be a disconnect between the general partners and the or general partner and the limited partners in terms of compensation. I have always tried to, and again, this goes back to Warren Buffett. I mean, he never charged asset management fees. He never AUM fees that are that are taken off the top no matter what the outcome is for the investors. I've never really believed in that, and it's not something that we do. Everything that we do and our different funds are aligned for our there's a good alignment between us and the limited partners. My very first fund, there's I get paid nothing unless the fund does well after 7 years. So, you know, all earnings are retained, and then at the end of that period is when we return and liquidate everything. And only if there's upside after returning everyone's initial capital do I get a percentage of that. So, if I end up going out and let's say that we break even or lose money, I hope that doesn't happen. To date, we've done pretty well. But if that were to happen, I would make nothing. I would get nothing. And then another thing is that in that fund, there's 8 or 9 limited partners, and I'm the second largest one personally. So I really believe in um, having skin in the game as an operator, and I see that that's not always something. There are operators that do that. So I'm not saying that none of them do this, but I think a strong focus on alignment between general partner and limited partners is crucial.
Now, when you're managing these funds, is there something specific you're looking for before you go, okay, this is the fund to go with, or these are the companies to invest in? What do you look for in order for you to go, okay, this is the ones to go with?
You talking about what we're like, what are the things we're actually investing in?
But yeah,
Yeah, so there are two different types of funds. So that first original one, it's closed now, so no one new can join it.
yep.
And that one was geared towards investing with good operators that have, a syndication or something like that. And we did a few of those, a built-to-rent multifamily property with a great operator, a mobile home park with a great operator. But we actually pivoted. This is a couple years ago. We pivoted into investing in public market companies because there was just a it was a good time to be a buyer for publicly traded real estate companies. This is after rates had gone up and values. Real estate is so heavily influenced by rates because there's typically a lot of leverage involved in real estate. So you know, there were these companies that they were trading at a very attractive price, and I started looking in the public markets and found some very interesting opportunities. And we like, for instance, we invested in this one company that owned they were formed in connection with J.C. Penney's bankruptcy filing, and they were to give some context, there were these two mall operators that purchased J.C. Penney out of bankruptcy and recapitalized them. And what they did was they split the operating business from the underlying real estate that J.C. Penney owned. And they took all the real estate and they put it into this liquidating trust, and they spun it off its own independent uh, company or trust. And they have the shares trade over the counter, and all the creditors were handed these shares, all the creditors that were owed money that didn't end up getting anything. Um, as you can imagine, a lot of them just dumped those, so the price just trickled down over time, and we invested in it at a really, really attractive basis. And long story short, in about a year, we held it a little over a year, and we did about, I put a good chunk of our fund into it, and we did about 50% on our investment. And that was actually the lower end of what I thought it was going to produce. So, you know, things went worse than I expected, and we still ended up with a 50% return on our money. And so things like that are what I look for in that fund. And it all comes down to margin of safety. Is what we're buying, is there a significant gap between what it's actually worth and what is the catalyst to get us there? Is there some kind of catalyst that's going to unlock that? That's how I look at those types of investments. Now, on the other side, we my main focus is hard money lending. So we lend to real estate operators, and it's very similar. I'm a value focused investor, and everything is based on the downside. I look at the downside way more than I look at any upside. And my focus is on not losing money, and doing a loan for someone that when we make a loan, we want to be in a good spot where if things go south and the borrower defaults and we have to take the property back, there's going to be a good amount of equity between what we're lending and what the property is worth, so that in the event of a default and a foreclosure, we're gonna make out okay.
Now,
So
the
that
hard
answers your
money
question.
aspect I wanted to jump into as well because there's lots like if you're comparing being a money lender versus investing in real estate, it's a lot more simpler, kind of. You're not dealing with the tenants, you're not dealing with all that kind of stuff. You are dealing with other stuff, but it's a little bit more. at a different level. Let's
Why
say.
it's simpler. That's why I do it.
So for those who are listening, go, huh, he just finished saying that real estate isn't really passive income, and he just talked that money lending is easier and simpler. What's what's that path for people to become a hard money lender?
So it's capital intensive. So you need cash. Whereas with real estate, you can get away with. I mean, my first flip, we pretty much had no money in it. It was a really good deal, and we were able to find a hard money lender who gave us 100% financing plus rehab, and so we were able to have very little capital tied up in it, and and that's how we were able to do it. You're not going to be able to do that in lending. You need capital, obviously, because
Yeah.
you're the one providing it. So you either have to have your own money or investors, or what I would recommend is a combination of the two. Um, and that's I think I would say for that it takes a little bit of time. I rarely see people that start out and they jump right into hard money. Usually they have started as a flipper or as a buy and hold investor, and then they slowly migrated towards hard money lending, just because you're dealing with you're making loans, and you just don't want to be wrong. You're loaning a lot of money, and especially if it's someone else's money, you want to make sure that you're doing all the right stuff, that you have a first lien deed of trust, you have title insurance, you have property insurance. You're just doing all the right things to protect that capital. So I'm sure people can like if I had the knowledge I have now and I went back in time and didn't have anything, I would get started right in hard money lending. But the problem is it took going through flipping, and it took going through all that to build that knowledge. And that's invaluable. So yeah, I mean, I hope that answers your question.
Yeah, for sure. Now, when it comes to partners that you mentioned and also investing in some of the funds that you have, what do you look for in the right partners or the right people that to work with you? Because I'm sure that not everybody is the right fit. So what's the, requirements that you're looking for?
Yeah, so our 506c, our fund that I can talk about and talk details about. It's a it's a 1 year. You basically get a promissory note from our company for a 1 year term, and then people can redeem it quarterly from there. Now, if I'm talking to someone and I just get the sense that they're kind of a fly by night investor, they're not really long-term oriented, then that's probably not someone I want to work with. I want to work with people that, I'm a long-term investor. I'm patient. And I think that's, if you look at the great investors like Warren Buffett and Howard Marks and Charlie Munger, they all have a long time horizon for things that they invest in. And I think that that's important, especially if you're investing in hard assets like real estate or real estate lending. So if I'm talking to someone and I can just sense that, they're going to be high maintenance and they're not really a long-term investor or long-term thinker, then that's probably not someone that there's other things out there. They can get invested in, liquid publicly traded things. And if they, get in it this month and next month they're bored and want to move on to something else, they can just sell it. And, that's they can that's what they can do. So we try to have people self-select, and we want those people to be long-term in nature.
Now, at the very beginning of this interview, you mentioned cloud and AI. So right now, that's the biggest thing. How is that impacting what you do?
It's everything. I mean, it really it's amazing what can be done. And this year I have really tried to adopt it and infuse it into our business. I've used it since it came out. In 2022, I think is when ChatGPT launched, and I was a casual user for a while. Then in 2024, I really started using it for looking at different investments and publicly trade. Like there was this one publicly traded real estate company. They owned 90 plus properties. I mean, it might have been over 100.
Mhm.
And I went one by one and I was using Gemini at the time. And I went through and the properties were all throughout the United States. And I was able to independently come up with a conservative valuation for each one, and it just saved so much time, and it was that. So that was, once I started using it for that, it was like, oh man, we're on to something here, and AI is powerful. And this year I've really infused it into our really everything that we do. So our underwriting, our everything. It's very we use it a ton. And I love Claude. I switched to Claude this year, and I think Claude is the most intelligent one that I've used out of Claude, Chat, and Gemini, the three main models. Um, I think Claude is the best for at least for what we're doing.
Where do you see it going? Like, do you see that people may just, focus on using AI versus going out to people like yourself?
No, there's a lot of people that talk about AI is going to replace us and AI is going to. I don't think that that's the case. I'm a bull on AI, and it is certainly going to eliminate jobs. It's going to eliminate things, but that will allow people to do higher level things, and especially the ones that are, you know, adopting AI and learning it at this stage, which we're very early. It might feel like
Yeah.
we're late into this whole AI thing, and we're not at all. We're barely scratching the surface, in my opinion. And I think it's a tool. It's like a calculator where, if you can learn to use it and master it, you're gonna become so much more valuable to a company. I'll give you an example. We have an operations guy that I've been working with for a few months now in our company. It's in our company. It's just me and him, and he is very adoptive with AI. And I mean, he does the job of like 5 or 10 people because of how open to using AI he is, and his throughput and his output is just so high because he's leveraging AI so effectively, and he's willing to learn how to use it. And he's not one of those people that's like, hey, oh, I'll just use it to reword emails. And I mean, if you're just using it for that, it can be used for so many more things. um so yeah, I think that's where it's headed. The ones that learn how to use it effectively are really going to separate themselves. And businesses that exist in industries that are low tech, and that are like lending or real estate, or a cleaning business, something like that, where there's a human component and you always need a human component. But AI can come in and just increase productivity, help you make better decisions. I think that for the companies that adopt it, that are in those, low tech industries, HVAC, that's another example.
Yeah.
Those guys are going to kill it. The ones that adopt it and use it effectively, they're going to run circles around the guys that don't.
Right. Very true. And yeah, I totally agree as well. I think it's how you implement it. And those who
Yep,
are able to implement, and there's going to be so many new jobs for people who are able to implement versus
exactly.
the ones that are going to be let go and whatnot. So,
Yep.
um, from this conversation with you, I feel that you were very successful at very young age. And have you ever come across the the stereotype where you walk up to somebody and you're looking for a partner, you want to do business, but they look at your age or they look at you and they go, wow, this guy's so young.
Yeah.
How do I invest with this person? So what was your strategy or what did you do to go around that? Because I'm sure a lot of people out there is like, I'm so young and people don't give me that respect of what I know. They just look at my age or see my face.
Yeah, I mean, I still deal with that, and I still think about it's still something in the back of my head. I mean, I'm a little bit older now. I'm 32, so I'm getting up there now. But but yeah, definitely. When I was 22, 23, when I was starting in the mortgage business, I mean, I would think about that all the time, and I think I just one, I just realized that there's nothing I can do here. There's nothing I can't make myself older, nor do I want to. Um, so I'm gonna combat this just by showing them that, I'm obsessed with what I'm talking about and what I'm trying to tell you about. I'm an obsessive learner and I'm gonna do everything I can to be, the most knowledgeable person you've ever talked to about this. And I might be young, but that doesn't mean anything, is so yeah, I just think that if you're hungry and people will see that. They will hear that. When you start talking about a topic and you know a lot about it and you're very confident in
Yeah.
it, that will quickly dissipate and they will realize, okay, this person knows what he's talking about and I should listen,
Hmm.
you know? And so I think that's the mindset that I had. But I was very self-conscious of that. I don't want people to think that I was just when I was getting started that I was just had a ton of confidence or anything. I was very insecure about that. I knew that I was young and I just I just kind of went for it anyway and just tried to show people through what I knew and the results and all that I could be trusted.
Did it help to have the third at the end of your name? Because for me, I'm like, wow, this person must be like in his 50s or 60s. And then like, oh, I
Yeah,
saw his pictures. He's not 50.
right.
Uh,
Yeah, I
um,
don't, it might have helped.
or was there like sticker shock for most people who opens the doors and wait a minute?
I know that that's happened before. I've seen people's faces when when I book a meeting with them and they've never seen me and I sit down and they're like, "Are you? Oh, okay." You know.
All right. So, my final kind of formal question for you is, what is one message, one advice that you have for everybody out there?
Um, I would say figure out what you're good at and then lean into that. Usually what we're good at, we like to do because, it might not be your ultimate passion. You may have some other passion, but what you're good at and what you're naturally, skilled at is something that I would lean into. In my case, I feel like I've always had a a mind that, I'm able to process numbers quickly and kind of simplify things. Like if I'm looking at an investment, I'm able to simplify it to its root, the root thing that everything hinges on, that will make that work or not work. So I think that for people out there listening, just figure out you know, what superpower I'm not saying I have a superpower. I'm just saying for you, figure out what that is. What are you really skilled at and what do you enjoy doing that just comes naturally and then lean into that. Like the scene in Good Will Hunting. Yeah, I don't know
Uh,
if have you seen that movie?
yeah.
When he's talking to his girlfriend towards the end of the movie and she's just like, "Why, how are you so smart?" And he's just like, he uses the analogy of the piano. He's like, Beethoven sees a piano and he sees this thing that you can create amazing sounds and melodies. And he's like, I don't see that. I just look at a piano and it's a box, it's a wooden box with a bunch of keys. And he's like, but when I look at some math equation or formula or problem, he sees it's like Beethoven looking at the piano. And I think for me, when I start looking at a deal, a real estate deal, that's how I feel. I just love it. I love every second of looking at it. I just get lost. You get in that flow state, and that's where I end up. And I would say for anybody out there listening, wherever you find that, that's what I would lean into.
Awesome. Well, thank you very much for that. Great words to live by. Before I let you go, I got five rapid fire questions for you. Give me the first thing that comes to mind. You're stranded on a deserted island. One food to eat for the rest of your life, no consequence. What would that be?
Vanilla ice cream.
Great choice. Hollywood calls and goes, "Hey, well, we love your story. We would love to do a biopic of you. Who would you cast to play you?"
Oh man. Oh, I would cast. Oh man, that's so hard. Who's a white guy with a big nose? Who's an actor with?
John Krasinski.
Yeah, sure. Let's go with Jim Halpert.
For some reason, that just popped into my head.
Yeah.
Anyways, he shows up at your door and goes, "Hey, buddy, I got casted to play you. Let's hang out. What
I
do you
feel
have
like I
planned?"
have his kind of humor and his like dry. Yeah, I like that. That's a good choice.
Awesome. So, what are you guys doing? What's that night out with you and John?
Night out with me and John. Uh, I don't know. Is John a investor? I feel like that's all I want to talk about is real estate and investing and that
Oh,
kind of thing. I have a 1-year-old and a 3-year-old, so there's not many nights out. So,
nice.
yeah, I can't really think of much.
Well, you could do a whole family thing with Emily Blunt and all that stuff, right?
Yeah,
So,
exactly. Exactly.
all right, they're hungry. You go, no worries. I got this perfect meal cooked up for you, my specialty. What's that special dish that you could cook up?
Oh, steak, a steak and mashed potatoes. I have a perfect way that I do a steak where I do a reverse sear and then I do it. I actually do it in the oven, not on a grill. You can control it so much better in the oven. Get it to the perfect temperature. I have a little temperature I stick in. It's so good.
I can't wait.
Yeah.
Okay, give me a number from 1 to 5.
4.
One, two, three, 4. So the word is clam. Okay, so if you had to use the clam as a metaphor for success, how is success like a clam?
Hmm. How success like a clam? I think with a clam, don't they just if you try to force them open, they will usually stay
Tighten up.
shut and tighten up.
Mhm.
So I think that for things, at least in my journey, like the hard money lending, that was a total accidental business. There are a ton of things I've tried to force and I've tried to just white knuckle and try to, open up doors that probably shouldn't be opened and the ones that just naturally open for you are usually the ones that at least for me, that I've had the most success with. The public market investing, that was totally accidental. The hard money lending, totally accidental. Wasn't looking for either of those things. So to tie it back to the clam, if you try to open that clam up, you might get nowhere and the clam will just shut its do you call it a mouth? I don't even know what you call it. It'll shut its mouth harder. But if you just, relax and just do what you can do, then eventually you'll opportunities will come your way that just the clam will just open up and there will be a pearl inside.
I see that. I was waiting for the pearl. I was waiting for it.
Yeah.
I see that. So that's how success is like a pearl. Any
Yeah.
final words from you, and then also, what's the best way for people to get in touch?
Yeah, I don't really have anything else. I think we covered it all. Best way to get in touch is just go to my website, will at harvey-capital.com. Or I'm sorry, that's that's my email, will at harvey-capital.com. They can shoot me an email. My website is just harvey-capital.com and I'm on LinkedIn as well.
Awesome. Well, thank you very much for that. Much appreciate your time and your story and your whole path to success. And hopefully everybody is listening to that and kind of pick and choose the stuff that will work for them. And much appreciated. So for everybody, he's Will. I'm Fong. Until next time. Today is the day. Today is the day to unlock your peak potential. We'll see you later.